Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, December 16th, 2009. In today's session, focus has been on the Federal Reserve, with the FOMC ending its two-day policy meeting and announcing their interest rate decision later this afternoon. In addition, there has been focus on U.S. economic data. Now, the Commerce Department reported that housing starts for the month of November rose more than expected, up by 8.9% to 574,000 units. That is the biggest percentage gain seen since May of this year. And in other economic data releases out this morning, CPI for the month of November rose by 0.4%, while the core CPI figure remained flat. And last but not least, in terms of economic data, the U.S. current account deficit widened to $108 billion in the third quarter. And taking a closer look at the spot FX markets in today's session, the U.S. dollar did pair earlier losses against the euro following a slew of economic data releases. But at the same time, in the New York session, the euro does continue to edge higher, edging closer to the 1.46 level. And meanwhile, taking a look at the Aussie dollar in overseas economic data, Australia's third quarter GDP came in lower than expected, up by only 0.2%. And at the same time, this has been weighing on the Aussie dollar, with the Australian currency earlier falling below the 90 level, touching 89.55. And the Aussie was hit, especially after the RBA released dovish comments and said that with recent rate hikes, monetary policy is currently within a normal range. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ICE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. Now let's take a closer look at the major FX option pairs in your daily trend report. First of all, we will start out by looking at the AUX, which is the US dollar against the Australian dollar. In the short term, it is turning up, and the pair is shaping a rounding bottom, which does call for a bounce. The preference of trading central analysts is long positions above the pivot of 106.30, with targets standing at 118.15 and 122.50 in extension. And now let's take a look at the BPX, which is the U.S. currency against the British pound. A continuation of the rebound is expected. It has rebounded on its support and is currently challenging its resistance. The RSI is also mixed to bullish. Now, the preference of trading central analysts for the BPX is long positions above the pivot of 60, with targets currently standing at 62 and 63.50 in extension. Now, moving on to the CDD, which is the US dollar against the Canadian currency. In the short term, it is turning up. The pair is still capped by a bearish trend line, but the technical indicators are losing its downward momentum. The preference of trading central analysts for the CDD is long positions above the pivot of 104, with targets standing at 108 and 111.25 in extension. Now, moving on to the EUI, which is the US dollar against the euro, the upside does prevail. The RSI is also well directed for the EUI, and the pair has broken above its bearish channel upper boundary and should post a further up move. Now, the preference of trading central analysts is long positions above the pivot of 67.50, with targets standing at 70 and 72 in extension. And now let's take a look at the SFC, which is the US dollar against the Swiss franc. Now, the bullish bias currently remains above 102, which is the pivot, and the pair has also broken above the short-term bearish channel upper boundary and does remain well directed. The RSI is also on the upside, and the preference of trading central analysts for the SFC is long positions above that pivot point of 102, with targets at 106 and 108 in extension. And last but not least, for our daily trend report, let's take a look at the YUK, the US currency against the Japanese yen. Now, it is currently under pressure, and the RSI is capped by a declining trend line. The YUK does remain within a bearish channel, and the preference of trading central analysts is short positions below the pivot of 92.40, with targets standing at 86 and 81.50 in extension. And in our next segment, which is our trend opinion, last week trading central analysts did get hold puts on the AUM as well as the British pound, and this was because the US dollar did continue to strengthen. And in terms of portfolio performance for Trading Central's portfolio on FX options, it is up by 1,222.55% since its inception in August of 2007. And since the beginning of this year, it is up by 591.55%. And in our next segment for our trend opinion, this week the US dollar does remain well directed and many pairs are challenging key levels. Now, the reversal sign could be in the cards, so Trading Central will stay aware of that in the coming days. Now, last Monday, Trading Central did recommend in their follow-up to consider a call on the NDO, as the pair was shaping a falling wedge. And looking ahead to next week, Trading Central analysts in the case of will be taking a closer look at the US dollar, especially against the Japanese yen for the YUK. It is challenging its bearish channel upper boundary. Also, the CDD is challenging its medium-term declining trend line as the RSI is mixed to bullish. And last but not least, the daily RSI of the SKA is currently breaking above its medium-term declining trend line and does call for a further advance. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.